Welcome back to Homes and Loans with Elite Mortgage. Today we have Josh Hicks with us here. He's with Brightway Insurance, and thank you for being here, Josh.
Thank you very much for having me. It's been a while.
I know. I think you're one of the best insurance agents around the area, but one of the ones we probably don't see each other often.
I know. I really appreciate you saying that. It's
Yeah.
been 15 years in the making now.
Yeah?
With
That's
Brightway.
how long you've been with Brightway?
Yeah. Yes,
Wow.
sir.
Yeah, that's a long time.
It's a very long time. I love it, though.
Yeah. What, were you somewhere else before, like another insurance office before? Or you were doing something else before?
No, actually, before I started insurance, I did construction
Okay.
and I worked on copy machines. I kind of landed this spot by accident.
Okay.
I
So
just
how did that happen?
moved to Florida on a whim. My
Okay.
uncle was a mortgage guy. My aunt was a realtor, and they had a insurance agent friend, and she decided to give me a shot. Didn't work so well there, but it did work at a different Brightway agent.
Okay.
hmm
Okay. And where'd you come from?
I originally moved here from Houston, Texas.
Oh, nice. Okay.
Mhm.
I've never been, but I hear it's very nice.
It's busy.
Yeah.
A little bit busier than Jacksonville, but I would say that Jacksonville and Houston are kind of mirrors of each other.
How so?
It's just busy. It's just a lot of people, a
Okay.
lot of freeways, a lot
Okay.
of surrounding areas.
Okay.
You know,
So I've been to Texas. I like Dallas. I've been to that. Is Houston similar to that or no?
better.
Better. Okay. Okay. Well, so can you tell us maybe like a funny story or maybe a big learning lesson, let's say, from one of your first clients that you can remember?
Absolutely. I
Yeah.
remember the very first policy I wrote.
Okay.
It was a secondary mobile home in the middle of nowhere.
Sounds tough already.
It was, and I'll still go in and say it was one of the hardest risks I've ever placed,
Okay.
just because of all the hurdles that I had to hop over. There was like a bankruptcy. There was no fire station within a 5-mile radius. There was no fire hydrants. There was like prior claims. It was a nightmare. And that was my very first one. That almost made me want to quit.
Okay.
It was that much of a nightmare. And from then on, I thought, is every time I sell a policy going to be this difficult?
Yeah.
Thankfully, it's only gotten better from there.
Okay, good. Yeah. I mean, you stuck with it for 15 years. I hope so.
Yeah, exactly.
Yeah. I don't want you to be miserable for 15
Yeah,
years.
right? That would be nice.
You think that'll be nice?
Just joking.
All right. Well, I say, I mean, unless you drink yourself to death. basically. But okay, so we were talking a little bit before we started filming about how the market is maybe harder and stuff like that, a little bit about that. How do you see the insurance market specifically, and what would you say to those people that maybe see it hard?
I've seen the market lighten up when it comes to insurance.
Okay.
So, step back in a time machine 2 years ago or something like that.
Okay.
It was nothing. There's no companies out there willing to take any new business. Companies were shutting down, going insolvent. Now we're starting to see more companies open up in the state of Florida.
Okay.
Rate decreases are finally starting to happen with some carriers, not all. Me and my agency, we've gotten more appointments, which is a good sign for
Right.
everyone. I mean, it just seems like it's becoming easier to place business
Okay.
with carriers.
Yeah. Okay.
Mhm.
And do you think we'll see that likely continue, probably, or get even better, maybe?
I think
as we
so.
move along.
I think so, because companies that were not writing before, it was due to a lot of litigation, a lot of laws that were put in place. Don't ask me exactly which ones. I don't
Yeah.
have it in front of me. But after a few laws were put in place, I think more carriers are feeling comfortable opening up for new business.
Okay. I remember this maybe a few years ago, but kind of going back to some of those companies leaving Florida, right, and all that
Yes.
stuff. I remember I saw something that said, I think like no company was profitable in Florida for insurance at some point. I don't know if that's still true or is that getting better?
There,
Is that the issue
you're
behind
right.
it? Yeah.
There was only one company that was profitable in the entire state,
Which is a
and
huge issue.
now
Yeah.
that company is actually um, issuing 100%, 150, 200% rate increases.
Wow.
Yeah.
Damn.
Yes.
But the other company's numbers looked a little better at
I would
least.
say so.
Yeah.
I
They're
would
trying to
say
figure it out, kind of,
it's
hopefully.
starting to look up.
Yeah, yeah. Okay, good. Um, what would you say to somebody that's maybe concerned? Let's say they buy an existing house, or maybe they like usually concrete or blocks are older homes usually,
Yep.
right? What would you say to somebody like that that's maybe concerned with their insurance premiums being higher? Is that true? How does that work?
So the older a house, the higher the insurance.
Okay.
It's always going to be that way. If your main focus is to have the lowest insurance policy premium possible, buy a brand new construction home every single year. You'll be guaranteed to have the best rates.
Yeah.
Unfortunately, that's not going to happen.
Right.
You know, so you got to be okay with paying a little bit higher for the home you want and the home you love. You know.
Yeah. Well, even if they were going the construction route, after a year, 2 years, 3 years, no longer new. So now those premiums go up anyway.
Eventually, the rate goes up.
Yeah.
Yes.
Okay. What tips or tricks will you say they can give, maybe that can help with insurance premiums without sacrificing coverage necessarily?
So I'll use myself as an example.
Okay.
If you have a monitored alarm system, make sure you let your agent know. Now, your agent should be asking up front. However, that doesn't always happen. So make sure you're aware that a monitored alarm system will help. If you have a house built prior to 2002, make sure you get a wind mitigation report. Even if the realtor or the inspector or whomever tells you, hey, it's probably not going to help, get it anyways, because 99% of the time it does help. It at least pays for itself.
Okay.
So it'll continue to pay for itself for at least 5 years. Now, I know you said without necessarily giving up coverage or anything like that. However, me personally, I went ahead and did away with the $1,000 deductible, and I increased it to $2,500. My reasoning behind that is filing a claim in the state of Florida can and will affect your rate in the future. It'll affect your eligibility, etc. So people are becoming less likely to file claims that are under $2,500.
Okay.
So they're starting to realize that insurance is meant to be used for catastrophic events. So that right there is a big major one that can save you hundreds on your home insurance. The second one is personal property. Personal property usually comes stock at 50% of the dwelling coverage. So they assume because you buy a $300,000 home, you have $150,000 worth of personal property.
Okay.
That's not always the case.
Right. Yep.
So make sure you look at that and go over it with your agent and discuss what the best options are. Many insurance policies have built-in riders. A lot of them I see to be very important. However, some of them, as a consumer, you may see no value in them.
Right.
So always consult your agent when it comes to going over your current coverages and how to possibly save money.
Yeah. Yeah. And I think, it's based what you were saying. It depends on your situation.
Yeah.
Everybody's situation is unique. So, and I say this to people on the mortgage side, like, you're willing to take certain risks, certain gambles, right? I don't know what those are. I can just educate you what they could possibly be, and you make the decision.
Sure. Absolutely.
Yeah. So, yeah, no, it makes sense. What do you think, and I don't know if this goes with that wind mitigation they were talking about, but what do you think is a common mistake or most common mistake buyers make as far as it comes with choosing their policy?
When it comes to choosing a policy, what is a big mistake? Shopping solely on price.
Okay.
When you shop solely on price, you tend to get the worst of the worst coverage. And then what happens whenever you do have to file a claim, you figure out you don't have coverage.
Right.
So you got to find an agent that you trust. And, it's not a bad thing to question the agent. Why is this way?
Yeah.
We had to exclude personal property in order to get you to qualify because
Right.
of your debt to income ratio. Whatever it may be, you can always add coverage back
Right.
after you close. But when you don't do that, when you neglect to do that, then if something happens and you don't have the right coverage, I would say that's a common mistake made.
Okay. And you think they just forget about it, or they're like, hey, I don't want to do this anymore because now the premium goes up?
I think it goes both ways.
Okay.
You know, you have the clients that genuinely want to have the good coverage, and then you got the clients that go, let's chance it. Hey, whichever way you want to do it, it's solely up to you. But, you know, just to let you know, that is one of the biggest mistakes a buyer makes.
Right. Makes sense. Yeah. I know some crazy people that just chance it. They're
Yeah.
usually down in Miami though.
Yeah, I know it's really big down there, and
Yeah.
I don't blame them.
Yeah. It's very expensive.
Very.
Yeah. What advice will you give somebody, maybe it's the first time buying a house, don't really know anything how it works, right? As far as what coverage is probably the most important for them to at least understand and go over with their insurance agent.
So the number one thing is to cover the house,
Okay.
because most things are replaceable.
Mm-hmm.
Your TV's replaceable. Your wardrobe eventually will be replaceable unless you're my wife and have too much clothes.
I hope she doesn't watch this.
But you want to make sure your house is properly covered. You want to make sure you have the right wind coverage.
Mm-hmm.
You want to make sure everything's covered at replacement cost. You want to make sure that, you know, your drywall, your flooring, etc., water damage is all going to be covered. There's a lot of things in certain policies that may omit certain coverage. So again, when you talk to your agent about the correct coverage that's right for you, make sure you ask the right questions.
Yeah.
Is water covered? Is fire covered? Is theft covered? Is falling objects covered? There's a lot of things that could potentially not be covered on that initial quote or your existing policy.
Yeah. And I want to ask you two follow-up questions we just said. So two things that you could expand on is you mentioned replacement costs.
Yes, sir.
And then what that means. And then also the coverage, right? You went over a few different things like fire, water, but sometimes they have limits too.
Yes.
Yeah.
All right. To elaborate on replacement cost,
Yeah.
there's two ways of looking at coverages when it comes to property and casualty: replacement cost and actual cash value. Replacement cost is exactly what it sounds like: the cost it takes to replace it to its exact likeness. Not better, not worse.
Right.
To replace. The other version is actual cash value. So imagine your car insurance. You drive a 1994 Honda Civic and you get in a wreck. They're not going to buy you a 2025 Honda Civic.
Right.
They're going to give you the money to replace a 1994 or 1995 Honda Civic.
Right.
So imagine doing that to your house that was built in the 80s. How detrimental would that be?
Yeah.
You know, hey, look, yeah, I'm covered for this amount of
Great way
money.
of putting it. That's a great way of putting it.
And now to replace my roof or whatever it may be, my siding or whatever, I'm getting a depreciated amount. So you want to make sure that you're aware. And if all you can qualify for is an actual cash value policy, as long as you're aware of it,
Right.
so you don't get hit with any surprises.